The NASDAQ is down nearly 30% year to date. Tech companies are laying off hundreds of employees, and now venture capital firms are holding back on funding. Yahoo Finance's Allie Garfinkle here to break down the trouble in tech. Allie, nice to see you. Why is the VC landscape in a bind right now?
It's great to see you too,
Nice
Dave.
to see you.
Yes,
Good to have
it's great
you
to see
in.
you in person. So the macroeconomic backdrop is kind of the place to start. Inflation, high gas prices, the war in Ukraine. It's all made VCs more cautious. I was at the Collision Conference in Toronto and talked to about half a dozen VCs, and they were all saying the exact same thing, which is, the bar for investment has gone up. And part of the reason why is just the nature of the VC model, right? You have VCs who are, traditionally speaking, unicorn hunting. They're looking for massive returns. The idea is that 10 companies fail, but one succeeds, and that 11th is Uber or it's Airbnb. And, looking for these high growth companies, you have sort of a problem in an environment like this, which is, what do you do when no one's growing at the level that you've come to expect? And the answer is that in many cases, VCs retreat and wait. They pull back.
And it does seem like we were spoiled for a while. It seems like every 2 seconds, a new unicorn. And now everyone's getting a little bit more cautious. And then, of course, you have the layoffs in terms of what that means and how they should be sort of thinking about what they invest in.
Yeah, that's a great question, Rochelle. There's a connection between the VC landscape and layoffs, I think at least. It's a cycle, right? Raising money is so hard, and the margin for startups gets small. The macroeconomic environment makes it difficult for you to hit your metrics, and then VCs don't want to fund you. So it's sort of a cycle, and a lot of the time, companies will just be looking to survive in a situation like this. For example, Better.com, right? The startup famously has been doing round after round of layoffs, and that's reportedly affected as many as 5,000 employees. Now, if you look at their funding, their last funding was Series D in 2020, and they've had a couple secondary market funding moments since then, but for the most part, they've been losing money, and the money hasn't been coming in. So there's a math problem developing, essentially. What do you do when your startup is running out of money?
Right.
And the answer a lot of the time is it's layoffs. And it applies to public companies too, by the way. I think it's really important to know that the system incentivizes quick growth at all costs in some cases.
Are more layoffs ahead?
It is entirely possible, Dave. We'll see what happens. I think if companies end up having to raise down rounds, it may prevent that from happening. But in the end, it is entirely possible layoffs are ahead because private markets operate really differently, and you'd rather fail than raise a down round.
Goodness, tough times indeed. Well, thank you so much. Allie Garfinkle there with us.